Alright traders, George here, and time for another day trading essential video. This one is a more advanced concept. It's actually some work I'm doing for myself right now, and I thought I would share it with you as it makes for a great video. I don't think you're going to see anything like this. For those of you that don't have the tools that I'm using, you can still approximate this work that I'm going to show you here, and it would be a fantastic exercise to go through, not only for the exercise of going through it, but as ongoing support work to your trading. So keep that in mind as we go through this. Let me explain what I'm doing here. This might take a little bit of a learning curve here, and I'll try and make it as painless as possible. The one-to-one risk reward says I'm risking X to make X. And in the gold market, gold futures for example, we look at values that really center around the 22 tick, 18 ticks as well. And what I'm doing with my level 2 system here, which is a semi-automated system, I'm using the strategy layout here to say I've got scalper, trader, and extended positions, 1, 2, and 3 contracts with 18, 22, and 26 tick stops. Okay, that means when the signal fires off for the model, the orders go in 3 contracts with those stop values. It also means that there will be resting orders to exit when price moves the same value in favor, 18, 22, and 26 ticks. So in gold, that's $260 or $220 or $180 for the time I'm looking at 3 hours in the morning. This is Pacific time here, so that correlates to 9:15 onwards there, Eastern. So what that looks like on the chart and what it looks like today, which is what I want to see is today, and the reason why today is because it's our first real day back after vacation, the most intense vacation block. Today, Monday, we can really say that everybody is right back at it. So as the signals go, and for you level 2 traders out there, I'm going black tip signal only, no trend filter, 22 by 2 on the Brickwicks. You can see here that the system is showing me where those entries occurred and where the exits were. We actually had a bit of what they call a flash crash today in gold, but the Brickwicks handled that real well. And this is what happened for that 3-hour stint this morning. But let's take this to where most traders never go. Here's where it gets really interesting. So here's what that translates to in dollars and cents. $2,700 on those 3 contracts. All the money came from the long side, and 2/3 win percentage there, 36 trades total. All right, that's all I need to see there. That's nice to see the gain. I don't really care so much that we made money based on this strategy today, but I want to see the number of trades there. I want to see the price action, the volatility, the momentum runs. That's all happening. So I know that we've got a good psychological representation of what you would expect with traders coming back to the table after vacation. And this just speaks well to the settings that I've got. What I want to think about now is market rhythms, and that speaks to volatility. Now, if you don't have the tools that I've got, what you need to do is figure out, what am I supposed to follow as a trader? What gets me into the position? Where does my stop go? Where does my target go? It doesn't have to be a 1-to-1, and it doesn't have to be a level 2 based entry, but you should have a setup and signal that gets you in. You should know what your stop is and how you're exiting, if you're exiting dynamic or fixed. This is obviously fixed. Where I'm going with this now is I want to go back to our strategy here, and I have not done this. I'm doing this as I do this video here. So what I want to see here is I've got an 18, 22, and a 26 1-to-1 set up. Which of these guys is doing the heavy lifting? That's what I want to get at. So what I've got to do is make a couple changes here to be able to do that, and I'll edit this part down in the video. So what I'll do is I'll just drop the contracts at the top there. So I'll start out by looking at an 18-18, and that's it. So here's what that one contract looks like. All the entries are the same, right? Because we just tripled up the entries there. The stops and exit points are what changed. So these are the same entry points as the other 2 contracts. And then let me just go to performance, and here is what I want to see. All right, so the 18 by 18 did $720, and of course all the gains coming from the long side here. 12 trades, 2/3 win percentage, the way this system reads it, and we're below 1/3 of 2,700. So that tells me that the 22 by 22 or 26 by 26 is doing the heavy lifting, and the 18 is out. That's all I need to know about that for right now. So back to the grid here, and now I'll just look at the 20 2 here, one contract, 880. Obviously we knew it was going to be higher. That's still below 900. Okay, 880 bucks, and that's good to know. Almost 900 there. All right, so that's the 22. Third contract is the sole one we're looking at. Remember, we're doing a 26 tick stop and a 26 tick fixed target. All right, so there you have it, $1,100. Better gain here, and the reason why is because the range is such that we can take advantage of that higher target value. Let's first remind ourselves what happened today just in terms of price action. This is a 1 minute chart. This is about what we looked at here. Is this from left to right, that price action? And while on a 1 minute chart or a 3 minute chart, or what most day traders are using, perhaps not able to extract the kind of gains that we can off of using the brick wicks. And also with the semi-automation, not able to respond, because remember that brick wick system is going to get you in the position without you having to do a thing. So that level 2 means semi-automation. You're already in. By the time you see it, it's in. You've got your orders already in place. If you look at the structure based on a 1 minute, 3 minute, 5 minute chart, you can see it's a pretty ugly day for gold for the 3 hours that we looked at for day trading. That's some good belief building for us. What I want to do next is look at this. This is a stock indicator, and this is for you folks that are not up to speed on some of the extra technology that I've got going here. But just going to a stock indicator, ATR, average true range, pull that guy in new, and go with a 7 period there. That's what I always look at. We're actually at a very low range here for gold. Okay, the range of gold trading on a daily basis has contracted quite a bit. In fact, if we look at the range in terms of support and resistance, you can see here that the support of range was actually broken here. We dove below that shelf and we have not yet returned to it. Maybe we're going to here, but this is the lowest we've been in many months. Okay, so one thing that I get out of that is there's enough range here to account for that larger stop and that larger target. The second thing is that we're at a range contraction for the most part, and the model did really well today. That's another piece of evidence that I want to see. If you don't have the brick wicks, if you don't have level 2, you can at least do this. What was the setup and signal that you took to get into positions today? What was your stop value? What was your exit? How did it do? Okay, and then you can see what the range is like here, and then you can gauge how well your model and setup and signal are doing versus the range that we're seeing in gold. Now, if we can get away with a 26 pip stop and a 26 pip target, which is greater than what I show in the live room, that also speaks to perhaps the start of a momentum run, a stronger momentum run, where that fixed target really could also be served by looking at a dynamic exit like our fibs. So if you're using your brick wicks to set everything up, that would throw you into a position that you could then manage on this chart. Let's say we just got short up here and we're in at 2. We've got 2 different stop values, but we only have 1 resting exit order. That's for the scalper. The trading contract would then exit dynamically based on the fib dots. So if you get a momentum run, something like this, that's how you exit. Also, the expansion is allowing for a greater scalping target. So that speaks to the rhythm of the market, and that also says if that changes, that could imply a greater change coming in the market. So that testing right there tells me quite a few things. It can give me the confidence to open things up, if you will, to look at greater sized targets, to look at dynamic exits in conjunction with that, to also keep in mind that that daily ATR is at a relatively contracted range, but the intraday volatility is such that we can do that. And that's something to also watch to see if it changes. That will indicate that the rhythm of this market is changing, and something I want to be on top of. So just some background work I'm doing on gold here as I get ready for the live sessions tomorrow. I think that's as far as I'll take it with this video today.